Hello and welcome to this special segment called MC Pro Stock of the Day. I am Stacey Pereira, and in this segment we bring to you some fundamentally strong stock ideas which you could consider for your portfolio. Today we have for you one of the largest book publishers in the country. I'm talking about Navneet Education as our stock pick of the day. Now let me tell you a little bit about the company. It is into book publishing and has the second largest player in the stationery business. It is a market leader in the state board schools with 66% share coming in from Maharashtra and Gujarat. It has also been expanding its presence in the CBSE market by exploring many digital initiatives. Now, the company can also boast of a well-diversified portfolio mix with unmatched brand value. Now, looking at the stock's performance, it has been a significant outperformer. The stock is up 22% in the last 1 month alone and has significantly outperformed both the Nifty as well as the mid-cap index. So why do we like Navneet Education? Well, there are a couple of long-term sector tailwinds that can propel the stock. Now, the outlook is quite promising, betting on technology-based education reforms. Even the implementation of the National Education Policy or NEP 2020 will further support demand. And the rising digital content in the classroom will then further boost the volumes. Navneet Education has also seen some strong volume growth in the publishing division, which has now crossed the pre-pandemic levels in FY23. First quarter is seasonally the best quarter for them, with solid revenues visibly is aided by that syllabus change. Now, in fact, the revenue is expected to reach 900 crore rupees in FY24. Even Indianica, which is its subsidiary, has demonstrated some impressive growth. Looking at the company's stationery business, that has shown some signs of recovery and has a promising outlook. In fact, it has witnessed some healthy growth in the domestic market and has taken strides even globally. The guidance for the domestic revenue is likely to increase by 20% by FY24. And its dominant position in the US markets can drive that up further by 15% growth in exports of revenues of FY24. Another reason that works for the company in its favor is the fact that input costs have now stabilized and margins are likely to improve going ahead. Domestic and global paper prices have softened and the company's overall profitability has more than doubled in FY23. We believe that margins will expand in the coming quarters, which will be aided by that lower input cost. We also know that the business opportunities in the edtech space are extremely large, and it is going to benefit these large tech brands with products that will be the driver when it comes to their valuations. Now, rising digital integration will also be something that will be looked into. Moreover, Top Tech and Be Masterly, two of its brands under the umbrella, offer huge potential for growth. We also have seen about 5 times jump in the value of investments that have been made in K-12 technology businesses. Let's look at the stock's valuation then. It is now trading at 7.1 times its FY25 estimated EV to EBITDA. Valuations are reasonable considering it has a market leadership position and also strong return on equity. And are there any other factors you need to be watching out for? Well, of course, the global slowdown could curb any sort of exports in this space, and edtech businesses continue to be a drag on the overall profitability. So those could be reasons for concern. With that, it's a wrap. Thanks so much for tuning in.